move now to a larger cap company, SpiceJet. Has been in the news as well. Sanjay Agarwal, CEO of SpiceJet, is with us now. Morning, Sanjay. Good to see you again. Before we talk about the business and how it's shaping up, there's been talk that you're in the market to raise about $75 million over the next few months, and you're also looking at a strategic investor after Istismar sold out. Can you clarify on these issues?
Yes, it is true that we are in the market, and I would just say up to $75 million. We are looking for somewhere in the neighborhood of $50 to $75 million. And the fact or whatever you mentioned that we are looking for a strategic investor is not true. We are looking for an investor. We already have strategic investors in the company. And right now we are looking at a pure fundraise through preferential allotment. So there has been no mandate to either Edelweiss or IDFC, who are managing this effort, to look for a strategic investor.
Who were the entities or entity that Istismar sold their 13% stake to, though, Sanjay?
There are a few that we are aware of, and that is public information. I'm assuming it's Mitali. I think Reliance Mutual Fund bought some, DSP BlackRock bought some, and then Birla Sun Life Mutual Fund bought a little bit of it. So those are some of the lead investors that I'm aware of.
Okay. Yep, it is Mitali. Sanjay, just to go back to the point about your money raising, how soon do you want to do it then, and what might it involve by way of dilution for you to raise about $75 million?
That should be a relatively straightforward math, Mitali. I mean, our market cap is somewhere between, depending on the day, between 300 to 350 million US dollars. And if we are looking to raise 50 to 75, but you also have to keep in mind that there is a potential conversion that might happen on behalf of WL Ross and Company and Istismar, because Istismar still holds the bonds in the company. So they are still an investor, and as of right now.
There was considerable excitement when you reported that 100 crores plus PAT last quarter, Sanjay. Is it a sustainable performance? Because a lot of skeptics, a lot of skeptics of the aviation space pointed out that it may not be durable, this run of profits.
We just have to wait and see, and because what is happening is the industry is showing signs of recovery in terms of the demand. Again, the February numbers were published by DGCA in the last couple of days, and the industry even in February saw a 16% year-over-year increase, which was also 8% increase over 2008, which was a strong month, and this was before the aviation demand started to decline. So demand is now exceeding the historic highs, and the capacity addition, so as I mentioned, in the last 12 months, the demand, or year-over-year for February, demand went up by 16%. The capacity only went up by 9% during for the same month, which means the industry load factors were better. Last year, the industry did, I think, if I remember it right, in February, 73% load factor, whereas the industry average for February this year was 77%. So as the demand-supply gap continues to correct itself, the industry load factors will improve, and hence the health of the industry will continue to get better. And I've moved into the kind of the business outlook, but we believe the demand trend should continue. The only wild card remains, the new service tax that was announced in the budget, to see if and how it will be implemented, and if it is, will it or will it not affect the demand.
Your load factors were 80% in February, but what about yields? Because they also played some part in the profit number, that the improvement in yields did play some part. Do you see yields improving from here or being under pressure?
No, I see actually if yields were to be under pressure, the worst time is the February and March time frame, because it's the leanest period of the year, and usually there is a competitiveness to chase the customers, and there are fare wars. But for the last 6 months, what I have seen is the fares have been absolutely stable, and this is the longest I have seen in my 15 months in Indian aviation for the fares to remain stable. And we think, as I mentioned earlier, as the demand-supply gap corrects, I think the yields should continue to remain stable. And if we were to look at February over February, as I mentioned, the load factors this year were 4 to 5 points higher than February of last year, but that is on top of a 25% improvement in yield year over year. So, that kind of goes to support my argument that the overall health is improving. Is it good enough? That depends from one airline to the other, but I would say the overall health of the industry seems to be improving.
Just to labor this point about yield improvements though, Sanjay, analysts are actually quite bullish about what you may see in terms of a jump. I mean, to give you the number, they expect you to have almost a 25% improvement in your yields in the second half of the year, the quarter we're currently in, and then extend that going into the next year. Do you think that's too aggressive a target by way of yield improvement, or it's doable?
See, Mitali, it's a function of our objective is to make sure we keep the travel affordable. And as you can understand, there is some price elasticity as well, that if the yields go up 25%, there will be an offset to the load factors. And that is something the airlines continue to evaluate, continue to adjust. But I think it will be too premature to say that there will be a 25% yield improvement without any offset in the load factors. So, it's difficult to tell what kind of load factors, but what I know is at the current load factors and the current yields, the industry could get healthier. Yeah. And if they go up by not 25%, let's say even 10. Go ahead.
Sure, please finish your point.
No, what I was saying was even if it's not 25% and the yield improvement is only 10 or 15%, they'll still improve, from where we are today.
Okay. Where's the market share ticking at right now for SpiceJet, Sanjay? The last figure I have is 31%. Has it improved since then? Is it holding steady?
31% is not the right number. Our market share has fluctuated between...
Sanjay would love to have 31% market share, Mithali. So it's some way to go.
There actually is a report then that suggests that SpiceJet's market share has gone all the way up to 31%.
It must be 12 or 13%.
That must be the report maybe that's supposed to publish 5 years from now. But anyway, just jokes apart. But right now our market share varies between 12 and 13%, and part of the reason is in the last 3 or 4 months we have slided back a little bit because we have not taken deliveries of airplanes in the last 13 months. And now our airplane deliveries are beginning to come in. We are getting our next airplane end of this month, and then we have one coming almost every quarter from here on. So we'll be back with the market share. But at SpiceJet, we are more focused on measured and profitable growth rather than chasing the market share. So while 31% market share sounds exciting, but that's not what we are really chasing.
Yeah, that would come with a plane as a bonus for Sanjay if he managed it 31%. They would give him a plane for sure.
Exactly.
Thanks very much for joining.
All right.
Thanks, Sanjay. Appreciate your time today. Move now to